Bitcoin has just closed a weekly candle above 48,000. In today's video, we're going to be going over the short-term and the macro charts, discussing what this means and what to expect next. This is not a video you want to miss. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Bitcoin has just closed a weekly candle above 48,000. And in today's video, we're going to be discussing what this means from a macro and a short-term perspective. Will we see an early bull run? How does this impact the 4-year cycle? Will the price action continue upwards on the short term? If so, where to? Or could the bears step in and push the price down? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us in VIP. We have a VIP group where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news, our help, and our daily video chat. If you're interested in access to all of that, go ahead and contact us in the pinned comment of the free channel for more information. Let's dive into the video. So starting on that market data, how are we currently looking? 24-hour volume is sitting at a total of 79 billion. This is up 14% in the last 24 hours. 24-hour liquidations is sitting at 118 million, up 58% in the last 24 hours. Within the last 24 hours, we have seen a total of 118 million liquidations, 42 million coming from longs, and 76 million coming from shorts. This does tell us a lot of people are taking massively high leveraged positions upon this $48,000 break, as we haven't seen all that much price action within that last 24-hour period, yet we have seen a very large amount of liquidations in comparison to the percentage change we have seen on Bitcoin within that 24-hour period. We'll also go ahead and jump over to the DXY now. So the DXY is looking relatively bearish, and we do have the economic news coming out tomorrow, which is going to be a CPI data, and depending on what the CPI data is, could massively sway the directions of the markets on the short term. Remember guys, as we approach these major news events, volatility is expected. So that means you have to reduce your position sizes. If that means you have to take a day break from trading to manage your risk, that is perfectly acceptable. If the economic data, if the CPI data comes out bearish, we will likely see a push upwards for DXY. If it comes out bullish, we will very likely see a correction underneath this 2-month-long uptrend, resulting in an initiation of the downtrend for the DXY, which would be very, very bullish for traditional assets and for the cryptocurrency market. Moving over to the traditional markets, we can see the S&P 500 is still pushing upwards, holding above that $50,000 level. 4 days until the weekly candle closes out, it is looking relatively strong, looking for a push to 5,100. Provided we remain above this $5,000 support level, we are still expecting a continuation upwards. If we do lose a 5,000 support level, that could be a good indication of weakness, and a potential correction back to support is possible. As of right now, looking very bullish. The same goes for the Dow Jones. We did trigger that $39,000 level, which was our target. We are starting to see a little bit of exhaustion develop over here with a nice DOWJ candle printing. Again, guys, if we are able to break through this $39,000 level, we are expecting a swing up to 40,000. Until then, resistance is resistance until it is not. Looking good, but not quite as good as the S&P. Enough about that, guys. We'll go ahead and jump over to Bitcoin. In today's video, we're going to be discussing the daily RSI breakout. We'll be discussing that in just a second. The weekly candle close above 48,000. We'll be going over the macro charts. What does this mean on the monthly? Is the 4-year cycle breaking? Are we going to see an early bull market? What will the macro price action do? We'll also take a look at the total cryptocurrency market cap, look at the overall health of the altcoin and the Bitcoin market, and then of course jump over to the short-term price action, discussing the big point. Will we break back below 48k, or are we just going upwards? So without further ado, we'll get into it, but a quick word from Bitget and BingX before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump into the video. So starting on that most pressing matter, which is we have just seen a weekly candle close. Fantastic stuff, guys. A weekly candle close above that major $48,000 to $46,000 horizontal monthly resistance. Now, as you know, this is a yearly long resistance, and thus, to validate a breakout, we are looking for that monthly candle close still. So that's still about 18 days remaining until the monthly. However, a weekly candle close is no joke. It is a fantastic start. We will start building up levels above 48,000. So showing a significant amount of strength. And we have to take this at face value for right now. As of right now, we have to now assume the $48,000 to $46,000 level is now converting into a support. The big question is this deviation or is this a proper breakout? So we'll answer that when we get to our short-term analysis. If we are looking at this chart from a structural perspective, what are the next targets for Bitcoin? So taking a look on the right-hand side at our visible range volume profile, let's go ahead and just move these over. We can see the VRPV has a nice peak. This is going to be our $48,000 to $46,000 peak. And as we can see above that peak at $48,000, the VRPV actually drops off for the first time in quite a long time. This is significant as it represents the distance from 48,000 to 52,000, being the divot in the VRPV, is actually a low historical resistance range. Thus, the required volume to push through this range is actually lowering as the price action moves upwards. This indicates an area of potential volatility where we could see volatility pick up if this breakout is sustained, meaning a move to 52,000 might not be as far away as some people are thinking, provided 48,000 is able to hold a support. So overall, excuse me, the weekly candle break is a fantastic start for Bitcoin to develop a potential monthly close over 48,000. And again, for us to validate that break, we do need to close a monthly candle above 48,000. So we haven't had that yet, but it's a great start. Let's go down to the daily chart really quickly. What we can see on the daily chart is another really bullish indication. And this is that the momentum on the RSI has now broken a higher level of resistance according to the overall direction of momentum within the greater visible range of price action. If we look at the visible range of price action since the $32,000 break, we have had periods of reduced momentum during this phase. This entire uptrend to 48,000, we were seeing momentum was actually falling. We did on the short term on that daily chart break through that trigger point a few days ago, which we discussed, which resulted in a move back to 48,000. And now what we can see is we are actually breaking above this trigger point on the RSI once more, which is representative of momentum during this entire phase of price action. This is incredibly bullish. It represents not only have we now broken above 48,000, we have got high time frame momentum flips occurring that could push the price upwards. So overall, right now looking fantastic. When we look for breakouts, we look for a few things. We look for one, trend strength. Do we have a uptrend? Number two, we look for momentum and strength. Have we got positive momentum? And number three, have we broken through structural levels? In this instance, we do have all three, and thus this breakout is considered at the moment, at least on the high time frame, a strong breakout. If we do look at the short term, things might change as we break and dissect the price action down to a smaller time frame. Overall, right now, looking good. Let's go over to the monthly chart. I hear a lot of people saying the break over 48,000 is going to, break the 4-year cycle and the Fibonacci level. So let's go ahead and discuss all of this because it is relevant. And then we'll get into the short term. So a lot of people are saying the Fibonacci levels were coming up to retest the 0.16 level and we never closed a monthly candle above it, and the Fibonacci. Now I'm just going to go ahead and say, guys, the Fibonacci indicator, retracements, extensions, they are what we call descriptive indicators. We have diagnostic indicators, we have descriptive indicators, we have analytical indicators, and we have what we call predictive indicators. Predictive indicators are future seeing indicators. They are representative of what the price action is doing and can potentially indicate what the price action will do, such as momentum. Momentum is a leading indicator. It is a predictive indicator. The Fibonacci retracement and extension indicator is a descriptive indicator. It is a descriptive tool. It doesn't tell you what the price action could do. It tells you what the price action has done according to prior moves. So we look at what it really is. It really tells us what percentage has the price retraced after the prior correction. And generally what we do find is it usually finds resistance around key levels. But I would like to go ahead and say this. If you are trading on a Fibonacci tool, I would say you are doing it wrong. A descriptive indicator is not predictive. It is not going to give you any viable data that could actually be applied to your trading other than confirmation bias. When you draw a whole bunch of horizontal lines on a chart, eventually some of these lines will apply and be significant. Now, if you ignore all the times it wasn't significant and only focus on the times that it was significant, which we do as humans psychologically, you'll automatically create a bias into thinking the Fibonacci levels are valid. Now, I'm not going to say they are not valid, but I'm going to say that they have no relevance in terms of these macro levels. What really matters is not what the Fibonacci scale is saying. What really matters is these horizontal levels of resistance and support. In this instance, it is a coincidence that the Fibonacci level lines up with the $48,000 level. Okay, so moving forward from that, does the $48,000 break occur on the monthly prior to the halving, meaning the 4-year cycle is over? The simple answer is no, it doesn't. The 4-year cycle is not a reflection of structural levels. The 4-year cycle is a date range trend. This is the 4-year cycle. Years between bear market accumulation and bull market. It is a date range trend. And thus the date range trend is still intact regardless of if the $48,000 breakout occurs prior to the halving or after the halving. Now, it does play a role in the potential bull run. It could indicate the bull run is going to be more aggressive, or the bull run could potentially start sooner. And if we do see a sooner start, we could assume we could see a sooner end. But that assumption is only an assumption. We could also say equally, if we see a sooner start, we could still see the same expected end according to the 4-year cycle, and we would have a longer bull run. Both assumptions are perfectly equal in validity. So a monthly candle close over 48,000 would not invalidate the 4-year cycle. It could potentially start an earlier bull run, and we don't know what impact that could have in regards to the next all-time high. So moving to a monthly chart again, we are still expecting and waiting for a monthly candle close above 48,000 to trigger a continuation upwards. If we do look at prior cycles, every single time we close a monthly candle above the dotted trend line being the dead cat bounce high of the prior cycle. Again, you can go back on the channel. We've been talking about this stuff for like 2 years now. We're talking about stuff all the way back over here. A lot of people talk about it now. Again, the bias are always late. Again, a monthly candle close of this level compared to the lows to that monthly candle, we can see the trend angle significantly significantly increases. We see an increase of 40 to 60 degrees. We see an increase from 36 to 59 degrees. That significant shift in the angle of the trend represents that this cluster of price action on the higher time frame is representative of more volume, more strength, more velocity, and more overall interest. This is what we call a bull run when it occurs on a monthly to yearly chart. So what we would expect again is a monthly candle close above 48,000. We would see an increase in the trend angle from 40 degrees to potentially 60, 59, etc. Okay, that would actually send the price action relatively vertical on the higher time frame. Now, if we do not see a monthly close above 48,000, that is not to worry, because technically, according to what we have seen in the past, the monthly candle generally only occurs to close above that dotted trend line after the halving event. Now, the halving event is still in 60 days from now, and that is why the only reservation we have at the moment of this breakout is the fact that it is happening slightly early compared to what we have seen in the past. But just because it is happening early, it doesn't mean it isn't valid, and that is very important. So let's go ahead now and jump over to the short term. Bitcoin, as we can see, has been pushing up significantly. If you've been following the channel, you would have kind of hit this on the money. You would have been longed, you would have been taking profits along the way. Again, we have been stacking longs, guys, in the channel for a very, very long time. A lot of people ask me, wait, when did you buy altcoins? I was buying altcoins in October, November, so in this phase over here. Basically, when altcoins would bottom out, which was fantastic, and I had been upwardly accumulating altcoins the entire time. When did we buy Bitcoin? We bought Bitcoin all the way down. And you can watch the channel, guys, all on the channel. We bought Bitcoin all the way down at 18,000 initially, okay? And then 16,500 over here, flipping officially bullish. So on the short term, what is Bitcoin doing? We have to take a look now. So Bitcoin is currently in quite an aggressive uptrend. Of course, let's go ahead and mark out that $48,000 level really, really quickly. That is going to be our $48,000 level. As you can see, Bitcoin is consolidating above that 48,000. So at the moment on the short term, there is absolutely no reason to be bearish on the short term until Bitcoin loses 48,000. If Bitcoin breaks down from 48,000, I would expect a correction to 47. A correction to 47 might actually flip the momentum on the daily back negative. Is hard to say for sure. We'll have to keep an eye on it. Or we could see a retest of this trigger point. The most important thing is that we do not flip this momentum negative again. If at any point this momentum goes negative again, that could result in a higher time frame correction of Bitcoin, which could take Bitcoin down to this 46 level or potentially this 44,250 level. However, as you can see, we have 1, we have 2, we have 3, we have 4, we have 5 supports up until that point. So a lot of support is sitting underneath Bitcoin. What we know for a fact right now is the weekly has closed above. Fantastic. We are sitting above 48,000, moving into a low historical resistance range according to the VRPV. Fantastic. We know that on the daily chart, we have flipped momentum again positive on the higher time frame. Fantastic. And we know on the short term, we are in an aggressive uptrend. Fantastic. So we have 5 really strong bullish indications. Any bearish indication right now is purely speculation, but we do have to plan ahead in case the speculation develops into actuality. So at the moment, I would not be loading shorts. I would be very, very cautious right now, especially because we are moving into CPI data tomorrow. Now, that doesn't mean I don't expect Bitcoin to correct, and if it does correct, it doesn't mean we aren't prepared for that. But as of right now, I would be more patient because we do have a massive news event coming out tomorrow, which has potential impact on the market. I would be expecting the price action to continue upward. Like we said, we are looking for 49,000, okay? We are looking for 52,000, provided 48,000 is able to hold. A daily candle close below 48,000 would mark this as deviation, and then we could potentially see a correction downwards. Our current macro uptrend on the price action is going to be this trend line. If you look where the arrows line up, like we said, we could see a correction back to this confluence point, which would be our third retest. And what we know on our third retest is the weakest retest. So potential for a correction at that point starts to increase. Again, if we zoom back out to this range, there is no reason to expect the price action to drop back to 40,000 underneath while this uptrend holds. If at any point we lose this uptrend, then it is time to start worrying about higher time frame corrections, and then it is time to start worrying for these shorts that you could take for these corrections toward the downside. So I'm going to leave it there. I don't want to overcomplicate today's video. At the moment, it is looking fantastic. The 4-year cycle is intact, even if we see a monthly candle close above 48,000. Fibonacci levels, they are descriptive, they are not predictive. Do not assume just because it works once, it is going to work forever. For the most part, when it comes to indicators, we are internally biased to only remember and recall the times things did work and not the times things didn't work. No one has sat there and back tested it. It is way more subjective to where you draw your retracements in than objective. So it is open to subjectivity, and thus it is unreliable, okay? When you have indicators like the RSI, which you do not have influence on how it is set, it is objectively set, you can have reliability in your strategies that you actually assign to specific, however you trade those indicators, okay? So I'm going to go ahead and leave it there. Thank you for watching. Hope you have a fantastic day. We'll jump into it tomorrow. I'm sure tomorrow we're going to have so much to talk about because we do have CPI data, of course, and we'll be having a confirmation of if we do see another daily close above 48,000. So I'll catch you guys in the next one. Have a great day. Cheers.